Good afternoon, everybody. We'll just give it a few more moments. We're just getting our attendees signing in. We'll give them some time because we do have, I think at last count we had about 170 people register for this event today. So not everybody's Zoom fatigued, clearly, as we come out here in Auckland, at least level 3 lockdown. So I can see the numbers coming in. Welcome to Tim. Welcome to Hamish. Nice to see you. Mr. West, Mr. Brian. Lots of familiar faces. It's all good to have you here as part of our continuing series to bring you some information up to date and from the experts around the world. Liz McGuire, nice to see you. Mr. Brown, no relation, but you know, good surname. Who else have we got? Riaz is there as well. Big shout out to Riaz. Wow, that's really is a bit of a who's who actually on here. So no pressure, speakers. Mr. Papa, excellent. So yeah, we'll just give them a minute or two just to sign in as we've opened the dialogue at 2 o'clock. Hope everybody's okay. I hope everybody's enjoying, at least for those in Auckland, being out of lockdown level 3. I don't know about you, but it certainly felt a little bit easier and a little bit different to the first time around. One thing I would say from a positive perspective is more people are definitely wearing masks, not only just on public transport, but even walking around the CBD. So clearly the message is getting there, which is a good thing if we want to get back to normal 2.0. So we'll give it just a few more minutes. Hi, Liani, thanks for joining us. Saj Najar from ASB, welcome. Nice to see you here. And we'll just give it another minute and then I'll start kicking off with some housekeeping and we'll set the scene for what the session will discuss and talk about a little bit in a moment. So just bear with us, maybe just for another moment or two. Thank you. So I'm just conscious of time. We're now 3 minutes past 2. Thanks for those dialing in on time. Welcome everybody for taking the time out of your busy schedules, no doubt, to join us here today. Another webinar in the sort of the FinTech series in conjunction with one of our members, Visa. And the title today is, what can New Zealand learn from FinTech developments in Asia Pacific and beyond? So we're going to hear from some great speakers. We've got a couple of little slides for your enjoyment as well. And what I'm really keen to understand is what are some of the things that we're actually seeing in other parts of the world that New Zealand and New Zealand businesses and companies should be taking notice of, not just in terms of challenges that those businesses might face, but equally actually what opportunities could be born from this in terms of partnering, potential collaboration, or indeed in what we've seen previously around investment opportunities. So a little bit of virtual housekeeping. We should be all used to this now for the amount of times that we've done Zoom or Teams or other things like Blue Jeans. But clearly in the event of an incident, please obviously if you're in the office, follow your own specific procedures. If you're at home, then please obviously jump to the most secure location in that vicinity. Bathrooms, if you're in the office, then clearly obviously you should know where they are. And if you're at home and you don't know where they are, then yeah, clearly we could have a bit of a problem. But with housekeeping out of the way, let's sort of kick in. So I mean, the start of 2020, it's definitely seen a significant impact on the way that we live, the way that we work, and clearly the way that we manage our money. Global payments company Visa has been working alongside fintechs for quite some time now, and really sort of actually sharing a lot of their expertise from different markets around the world. Seen as a leader, obviously both locally here in New Zealand as well as globally, and will provide a view on how the sector has actually responded to some of the interruption that we've obviously seen and are continuing to see obviously through COVID. Now, I won't go through the bios of the speakers. I'll let them introduce themselves. but it's very clear that we've got some fantastic insights going to be coming from them. So we've got the head of digital accounts in FinTech Asia, Tasneem Padai, and we'll be joined by Anthony Jones, who is the head of innovation and partnership for Australia, New Zealand and the South Pacific. And we'll also have Mr. Todd Wackrow, who's the head of growth for Zip New Zealand. So fantastic lineup. So what I'd like to do now is I'd like to hand over to Tasneem just to take us through some of her observations and some of her findings of what's been going on here in the market, but equally, obviously, in what's happening in Asia Pacific. Tasneem, it's great to have you here. Thanks for taking the time and really looking forward to your presentation. Thank you. Over to you.
Thanks so much, James. My pleasure being here and joining both Anthony and Todd for the discussion later today. But we thought we'd kick off with a few slides really quickly, just to kind of set the scene here. Just kind of reintroducing myself. My name is Tasneem. I lead digital accounts in the FinTech Fast Track program for Visa in Asia. So work really closely with global and regional digital partners, as well as managing FinTech engagements for the region. So I think it's obviously no secret at all that the global COVID pandemic has had a devastating impact on health and well-being of many of us, right? It's hit economies hard, but what it's also done is it's presented opportunities as we all adapt to the change and this new normal, as a lot of us call it. The full impact of the pandemic will not be completely clear for some time, nor will the recovery curve, right? But Visa has already seen an acceleration of many of the payment trends that we've observed before the pandemic, as digital commerce becomes more and more part of our daily lives. And in view of these changes, we've been leveraging our global network to connect and work with our digital partners to make it safe and efficient to move money across the world. So if you flip to the next slide, what I'm going to do today is at Visa as a network, we work across banks, merchants, fintechs, consumers, and other ecosystem players. We're kind of the players sitting in the middle. So we see trends across all of these. And what I'd like to do is share a few of these based on my experience working with key partners in Asia. We'll take a look at how COVID has impacted the behaviors of consumers and businesses, and we'll also kind of focus on the rise of platforms, as well as, of course, how fintechs across Asia have responded. And finally, I'll share with you how Visa ourselves have responded and highlight some of the initiatives that we've developed to work with fintech companies like many of you watching this webinar. Let's start with consumers. That's on the next page there. Consumer behaviors have changed rapidly and dramatically during COVID. Almost all international and interstate travel has disappeared, of course, but our day-to-day activities have also evolved. In research that Visa has done, what we found is that with consumers, financial health completely trumps physical health. So 6 in 10 Asia consumers, particularly in developing economies, say that the pandemic has already impacted their household income. So 4 in 10 consumers in Asia are working at either reduced salaries or are furloughed or unemployed. What this means is that we are finding consumers to be more and more pragmatic and shifting their purchase and payment behaviors. So the impact of this, there are 4 things that I'd like to talk through today. So firstly, there's obviously a huge shift toward digital and contactless payments. Consumers don't want to shop at cash-only stores. There's a huge preference for touchless, tapping to pay, to minimize contact with the terminal, or preferring authentication that does not require contact. We've done some surveys. Visa's global back to business study showed that 48% of consumers won't even shop at a store that does not offer contactless payments. And in fact, 62% have used cash less since the start of COVID-19. So at Visa, we've worked with regulators to raise contactless limits in countries like Australia, New Zealand, and Bangladesh. And we've got 12 countries today that are at more than 90% of contactless penetrations for face-to-face transactions. The second kind of trend that we've seen is a move towards digital apps and digital commerce. So consumers are spending more time on social media. I'm sure all of us are as well. Weekly time spent in apps has grown 20% year over year. And consumer spend on both iOS and Google Play grew 5% year on year. What we've also found interestingly is that 41% of consumers in AP made 5 or more e-com transactions in the last 3 months. And close to 1/5 of these bought food and beverages online for the first time ever. And about half expect online spend to increase in the following month. And increasingly, we're also seeing consumers are saving their credentials on file for things like streaming services and food delivery and so on. The third kind of trend that I'd like to highlight is, and this goes back to consumers becoming more pragmatic, is price sensitivity. So 1 in 3 consumers in that same survey that I talked about before in AP told us that they completely avoid non-essential spend for the foreseeable future. So when consumers feel financial uncertainty, they become really deliberate about how they pay. We saw this in the Asian financial crisis back in '97. We saw this in the global financial crisis in 2008. And at Visa, what we're also seeing is that they're moving from credit to debit. So that they can keep a control on their budgets. So in New Zealand, debit card use was up 8% in June, and credit card spending was down 21%. And we've also obviously seen buy now, pay later providers like Zip seeing significant growth, which I'm sure Todd can talk about later during the discussion. The fourth and last trend is that consumers are looking for new ways to move money. So they're leveraging P2P to send money to families and to friends across borders or within a country. And specifically at Visa, we have a product called Visa Direct, which between Jan to March 2020, we've seen powered 90% more P2P transactions. So huge lift in remittances across consumers. Now, new habits we've seen in studies take on average 60 days to form. And the pandemic has been here for much longer than that. And so many of these habits that we're seeing are here to stay in the mid to long term. And so we'll see how things progress over the next few months. Now let me switch to businesses. If you flip to the next slide, the other side of the coin are businesses. So to ensure that they can stay open and continue to serve consumers during the pandemic, businesses of all sizes have had to adapt rapidly and innovate to create new products and solutions. Few of the trends that I'll talk through today. So firstly, in Asia, we see businesses, especially in countries where there's a high percentage of unbanked and cash transactions. We're seeing that they are offering consumers and SMBs credit lines to help them tide through this economic downturn. So offering a variety of flexible kind of credit solutions, things like balance transfers, short-term loans, installments, buy now, pay later, etc. Another trend that we're seeing is enabling long-tail merchants, really small merchants, to accept digital payments easily, going from offline to online. And this includes things like contactless readers, of course, but also launch of solutions like tap to phone, using your phone, your Android or NFC-enabled smartphone, converting that into a mobile point of sale machine. So one example is in India, for instance, we're seeing businesses experimenting with mobile payment in areas that don't even have good connectivity through even basic phones and sometimes even without phones. We're seeing companies like Stripe and Shopify helping small businesses build an online presence and accept digital payments through payment gateways. And at Visa, we've been piloting low-cost digital acceptance solutions through Tap to Phone as well. The third trend that I'd like to talk about is empowering gig economy workers. So faster and immediate payouts, providing features such as advances against unpaid invoices, giving them the ability to find gig jobs on the app itself. We've seen a huge rise in that as well. Within the B2B environment, the last thing that we are seeing is suppliers are looking to minimize cash transactions, and the ability to bank and check is becoming more and more limited. So streamlining vendor payments with the use of things like virtual business cards, companies like Airwallex are doing this really, really well. We're also seeing simplifying of payroll. So Visa Direct, for example, has powered over 100% more earned wage transactions for workers seeking on-demand pay. So we're seeing all of these new ways of collaborating, tools, finance and accounting platforms becoming more and more embedded into businesses during COVID. Now, let me talk a little bit about rise of platforms, which is on the next slide there. As discussed previously, in the rush to provide customers with online shopping options, many businesses have chosen to join e-com platforms rather than build their own online experience. So the Shopify's of the world. And likewise, more and more consumers have been relying on TradeMe, eBay, Amazon as their virtual shopping malls, while face-to-face retailers have been closed. We've also seen home delivery of food far easier and in most cases less costly for a cafe or a restaurant to get up and running on Uber Eats than for them to build out their own website and employ a team of delivery drivers. So we've seen a huge uplift in that as well. The other platforms that we've seen quite obviously are new platforms like Zoom and Teams using DocuSign for the first time. So businesses are doing that. All of this has resulted in efficiency, reduced carbon footprint, and integration of payments quite easily. Overall, what we've seen is a huge and dramatic growth and importance of these platforms in helping to connect consumers on one side and businesses on others. And it's likely that these trends will continue with us beyond the pandemic, and we'll be discussing this with Anthony and with Todd later on in the presentation. Lastly, let me touch upon some of the things that we're seeing in Asia in terms of direct response to COVID. I can see some questions coming in, and I'm sure we can take it during the chat that we're going to have later, panel discussion that we're going to have later. Let me just quickly talk about some of the COVID-related initiatives that we're seeing in Asia, including fintechs and companies that are providing payment services. So 3 trends again. So one is we're seeing companies reallocating excess labor really quickly. So for example, in China, O2O players, including Alibaba's Hema, which is a store, Meituan and JD7 Fresh have forged partnerships with about 40 different restaurant, hotels, and cinema chains. And what they're doing is sharing employees to shift the needs to urgent delivery during this period. We're also seeing in globally DoorDash offering a priority access program to help restaurant staff that are out of work basically to sign up as delivery agents to meet DoorDash's increased needs. We're also seeing companies launching new features to meet consumer needs. So Postmates has introduced contactless deliveries to reduce the possibility of person-to-person transmission. In Asia, we are seeing Grab doing the same with their delivery services. And then there are new drop-off options that customers can select within their apps to drop off delivery at door or on the curb. Uber, and this goes back to what I was talking about earlier, with gig economy workers wanting instant payout, Uber has introduced a daily payout features to help both their delivery folks as well as restaurants focus on food and not finances during this period. So restaurants can now count on daily payouts rather than weekly billing. And lastly, we are also seeing a lot of altruism during this period, right? So companies are stepping up to help small businesses. So Facebook, for example, has rolled out various initiatives that are enabling businesses to update their offerings and operating hours and crowdsource for funds, facilitate pre-purchase of gift cards, and so on. In India, for instance, they've recently launched their donation product to help support COVID initiatives. Going back to DoorDash, DoorDash has a feature where users can make donations to restaurants when placing delivery orders, and restaurants receive 100% of these funds. Uber is also doing the same. So they match contribution up to USD 3 million as a donation to the National Restaurant Association in the US. And here in Asia, Foodpanda and Deliveroo have had tipping options and round up to support local restaurants. So those are just a few of the examples, and we'll get into some more as we get into the discussion. I did want to take a minute to just talk about some of the things that Visa is doing in response to the pandemic as well. So if you could just flip to the next slide. First of all, we've announced a pledge to support 10 million small businesses to spur their recovery through this period. We've launched Click to Pay in Asia Pacific in July, and in New Zealand, we've also launched our Where You Shop Matters campaign to support local small businesses. Here in Asia, I've worked personally with Gojek to help set up an initiative to help small businesses learn how to build an online presence. And we've collaborated on putting together a few videos that Gojek has then kind of distributed to their small business base in Indonesia. We've also partnered with FinTechs in Thailand to help SMBs kind of learn how to accept digital payments on online platforms. So just a few of the things that Visa's done during this period. I'll just close by saying, for those of you who are looking to work with Visa through our FinTech Fast Track program, I'd encourage you to go and check out our Visa Partner Portal. That's on the next slide. Really easy to get on there and apply for the Fast Track program and look through the different resources we have for FinTechs. And just land on talking about what the FinTech Fast Track program can do for you. We've been really busy through this period, given that digitalization has actually driven up efforts with some of our FinTech and digital partners. We can help you go live really quickly. That's one of the promises of the FinTech Fast Track program, and we can also find favorable commercial terms through this period to help you get up and running. So do go to the website and get in touch with us if you're interested in that. But with that, I think, James, I hand it back to you.
Thanks, Tasneen, and really good update. We did have a couple of questions as you sort of went through, and thanks, Ivana, for jumping in. There was one that was quite specific around some of the statistics and the data points. Was that, or were they sort of unique to New Zealand? But I think Ivana mentioned that a lot of the data that you shared there was actually Asia specific. Would that be correct in saying, just for clarity of the audience?
Yeah, these are Asia, overall Asia numbers, yeah.
Fantastic. So one question actually come through from Liani. Thanks for the question, Liani. She basically writes here that it's great to see that attitudes and behaviours obviously are changing. But with your analysis of the data, have the attitudes changed been driven by decisions from a younger demographic? Are you seeing that, or is it actually across the whole demographic?
No, actually, it's across the whole demographic. We did cut across age and other kind of metrics, but we didn't see too much of a statistical difference in the attitude. So across the board, we're seeing similar kind of change in attitudes across consumers.
Okay, that's good to know. Now, just a couple of points before I open it up to AJ and Todd to jump in as well. You mentioned there in terms of people obviously being impacted through COVID, people losing their roles, some people obviously going down into reduced hours, which means sometimes a reduction in salary. That also changing the behavioural habits of the way that people spend.
Yeah.
Is there any other factors that you've noticed that are very specific to COVID, or is it difficult to really pinpoint during this particular time?
So do you mean factors that are changing consumer behaviors? Is that?
Yeah, so I mean, obviously with the, more adoption technology, you mentioned obviously the increase in people spending in time in their digital apps, and obviously through e-commerce and things of that nature. I was just curious if there were other factors in the research, or was it generally pointing towards COVID at this particular point in time?
No, I think it's just, acceleration of many of the trends that we were already seeing. So things like digitization and so on was already happening, right? But we're also seeing that many economies are kind of stalling, and stimulus is not going to help sectors recover. Skills are becoming less fungible. There's excess unemployment. So these are really profound challenges that are going to change the way that consumers shop and behave for a very, very long time, right? So the shift is really connected to COVID. And to your point earlier, some of the things that we're seeing are like category consumption shifts, right? So quite obviously people are spending only on necessities. But also during the pandemic, we saw things like home fitness, online entertainment, and so on increase. But over the last few months, as economies are starting to kind of open up, particularly in markets like China and so on, we're seeing non-essential categories kind of recovering and going back to pre-COVID kind of levels already. So it kind of gets it feels like it's going to be a little bit of an up and down as things recover, shut down, go back up and again, and so on. So we're seeing a little bit of kind of a lumpy curve even around category consumption and how consumers behave for some time to come.
And you also mentioned obviously the contact limits piece being increased. And I think what I really commend was the ability to move fairly quickly in response to obviously the situation where, technically we're actually forced that we can't actually utilize cash anymore. Any particular countries that sort of stand out? I mean, so if I look at, I know we're talking Asia specific, but if I look at the UK, where it felt like their limit didn't increase that much. So what I'm trying to ascertain is that in us going from $80 to 200, what significant difference did that actually have in allowing businesses to sort of transact? Whereas in other countries, when the limit wasn't increased so much, actually was that more of an impact negatively, as opposed to obviously being a positive?
I think overall we've seen a positive trend with contactless, right? In all markets where we've had contactless acceptance for a while now, and where it's been above, say, 20 to 30%, we're seeing that upward trend regardless of whether the contactless limits have been increased or not. So that kind of speaks to the fact that contactless is kind of here to stay, and people want to go that way for the near future. But that said, in countries where the limits have been increased, and here in Asia, it's really been Australia, New Zealand, and Bangladesh, we have seen, I believe, increase in higher ticket size transactions as well over this period. I'll let AJ, Anthony, kind of comment on the specifics around Australia and New Zealand, but in general, we have seen that increase as well.
Excellent. And AJ, yeah, I mean, if you want to jump in there, maybe just to sort of add some other context.
Yeah, I mean, certainly the markets like Australia and New Zealand, where we already had fairly good and high levels of contactless penetration, even pre-COVID, we certainly have seen that increase. We've seen more transactions on those higher levels. I don't think we've actually released any data on the exact number of increase or the percentage of increase, but I'm sure we will over coming months. But it's certainly been a huge change in terms of behaviors for a lot of people. You mentioned earlier, James, about is it been across all demographics? And I think a classic example is probably my father-in-law, who's in his mid-70s, who's gone from being a cash kind of guy and never shopping online to now being someone who will only use contactless and now buys all of his groceries from Woolworths and Coles via online. So he's completely shifted his behavior in the last 4 months, just to kind of bring it back down to earth in terms of what does it mean for people on a human basis. And because he's a little bit concerned about what the outside world looks like and not wanting to put himself at risk, that's been fantastic for him, right? To be able to use contactless more often than before, and then also to be able to be prompted to go online. And what that's meant is that behavior will continue, in my opinion, way beyond the pandemic, which hopefully we'll see the end of sooner rather than later. And he'll continue those behaviors, and is starting to shop online for things other than groceries as well. So I think we've all seen, and we've probably all got examples of members of our own family that have reacted like that. And there's some real benefits that have come out of this.
Yeah, and I found it quite interesting, if we can call it, let's say, lockdown level 1. Or the first round of lockdown, where 2 weeks prior to that, I interviewed a CEO of one of the banks here in New Zealand talking about the removal of checks, and it was coming a little bit under fire. Sort of not forcing people to obviously use different methods, but really trying to make people aware of the reasoning behind it. How, little did we know that, a couple of weeks later we'd be forced into a situation where actually the sort of utilization of checks and cash pretty much removed from us anyway. And I think you're absolutely spot on that people are now more aware of other methods available to them. And I think it's an educational piece and an element of trust that, if I, you're very similar to my dad. If I can feel it, touch it and smell it, it's real. But if I'm doing it through my card or my phone, then I'm a little bit uneasy. But I think to the statistics that Tasneem shared earlier, we are seeing that adoption scale increase dramatically across the globe. And I think your point is very valid that will just continue. And that sort of conversation and moving towards a cashless society, I think, will be increased because of the situation. Todd, if I can bring you into the mix, and a big shout out from Mr. Brown. Great to see Zip not only becoming the most popular financial services app, but holding on to that post-lockdown. So I don't know if Rick's suggesting we might get a little trophy for you there or a little certificate, but I mean, clearly you guys are doing something very, very well. A question for everybody, but I'll pose it to you if I may, Todd, just in the first instance. We talked at the beginning there about, you know, the sort of the changing ways of the way we live, the way we work, and clearly the way we purchase. But I suppose, and we may have touched on this, but I mean, how would you share? I mean, how is the current pandemic reshaping the way that you've focused the business and to some extent maybe the business priorities, given the sort of the demand for the type of product and solution that, you know, Zip provides?
Yeah, well, I think we've probably been pretty fortunate, given the challenges a lot of businesses have faced over the past 6 months, that we've seen a real sort of explosion in growth for our business. And I think that's really been driven sort of as discussed already by the shift to e-commerce primarily. So I think there's also been a massive shift towards shopping online. You know, for many weeks it's been the only way you can transact, and that's really pushed, you know, higher frequency for people that shopped occasionally, and to Anthony's point, it's getting people that have never really shopped online transacting. And for us as a buy now pay later product, we do over-index in e-commerce, so that's meant it's certainly driven higher usage. But I also think you know, there's a couple of other interesting areas that it's driving growth outside of that. So for starters, you've got, you know, businesses that haven't traditionally seen e-commerce as their thing being forced to rapidly make it their thing. So, you know, for us, it might be butchers, you know, people selling seafood. We've had partners that I guess have traditionally just relied on, you know, bricks and mortar, now having to rapidly within weeks get up online. But I think the biggest driver of innovation we're seeing is not strictly linked to e-commerce. It's just actually shifting consumers to try new things. So I think the thing with traditional brick and mortar shopping, people will come in, they tend to just default to paying the way they've always paid. You know, whether it's tapping the card or swiping the card or paying cash, it's sort of an in and out transaction. Whereas I think online, consumers seem to be more willing to investigate new payment methods, try new payment methods. So for us, we've seen huge uptake on more organic trial and usage from new customers. And then not only are we seeing that impact on e-commerce, but it's also flowing through back into the brick and mortar world. So, you know, we're still, even given all the time we've had physical stores closed in New Zealand, we're still seeing over 50% of our transaction volume coming from physical stores. So we're seeing sort of e-commerce and online driving the trial and the usage and the awareness of new payment types in our case. But then that is then, once they get comfortable with that, that's then transacting back into traditional retail as well. So, you know, focus-wise for us, it probably hasn't really changed too much on the focus. It's probably just sort of really, amplified that and accelerated it. And for our business, really, it's a real global focus at the moment. With we were a Kiwi business called PartPay when we launched, and we had created a global partnership in the US with a business called QuadPay in South Africa, and also launched in the UK. So that was certainly part of why Zip acquired us in November, to get access to those markets. Zip since just closed the full acquisition of QuadPay, the US business, on Monday. So it's really about a huge, you know, global spread at a pace. And then the final shift, I think, to sort of touch back again on some of Tasneem's numbers, is from a business sense. So obviously there's a lot of, you know, it's challenging times, it's a challenging economic climate. So I think our business has been generally consumer focused, but we've recently had a real shift to look at offering services into the business communities, especially SMEs. So last week we announced a partnership with eBay in Australia to extend lines of credit to their small business network. So that's again something that was in the mix, but probably again has been accelerated the last 3 or 4 months around how can we actually add value and extend services out to businesses as well as just consumers.
And just a follow-up question as well. I mean, obviously we've seen a real surgence in buy now, pay later, and Rick's just sort of asked a question there. In terms of
three page for me, and then I just send to my email. Like last time you gave me. Okay. Most I need within.
Someone just come off mute. Thank you. That's all right. I suppose it was either going to be a cat, a dog, or a child. So I mean, someone coming off mute's not really a big thing, is it, these days? Yeah, just sort of go back to sort of what I was saying, Todd, in terms of obviously the surgence of obviously the usage, non-essential goods. Are you seeing that now in terms of some of the data that you're actually pulling out? You know, just be curious to sort of get an idea of your views on that.
Absolutely, massive shifts. And I think if you sort of rewind 12 or 18 months, it was more, you know, consumer retail. It was the new bike or the new pair of jeans was probably the core products. But we've seen a real shift in towards, you know, food and beverage. So you look at someone like the Mad Butcher, who, you know, physical stores and online has become hugely popular. But again, that also drives, you know, product innovation, because the way you use a product like ours is obviously very different for food and beverage. Our base product is a 6-week installment product. If you're buying a weekly food every week and still paying 6 weeks later, there's a way that can obviously catch up on you. But what we're seeing in New Zealand is people will use our product to make a large purchase, but then pay it all off a week later. So it might be the case that they can go to the Mad Butcher, have a big order for 2 weeks, 3 weeks worth of meat to freeze. They'll put it on Zip, but they'll actually make those payments earlier. So it's more about that budgeting tool and that flexibility. And in Australia, the Zip product is actually a fully flexible account-based product. So as opposed to New Zealand, it's a bit more about fixed installments. Zip in Australia is about flexibility. So often it might be people saying, hey, I'm going to put a big order in. I want to, you know, someone like the meat box has $100 minimum for free shipping. With our product, people can make a large purchase but spread it over a couple of weeks without paying any fees or interest. But certainly a huge shift more into that everyday spend, and in particular, yeah, food and beverage is one area which obviously seen massive growth in the past 6 months.
So clearly here for the foreseeable future and growing, which is what we want to be seeing. There was a quick question for you. I want to come to AG next, but if you could answer this one quickly, Todd. Is Zip going to be integrated into Wix in the near term?
That's a good question for me. I probably don't have the answer for that one, but I'll commit. Whoever's answered that can hit me up on LinkedIn after this, and I'll ask. I do know that it's been more on Wix's side that they haven't been up for integrating with Buy Now, Pay Later as opposed to our end. But I'd need to check with someone else on the team, but I'll commit to doing that. I'll take a note of who that is and reach out and answer that for you.
Yeah, sorry, that was probably a little bit unfair of me putting you on the spot there. AJ, I'll come to you actually, and then Tasneem, I want to come to you about a question around the sort of the program. Across, I mean, in Australia, I mean, obviously the sort of the fintech scene has been thriving for some time. Huge amounts of activity, lots of fintechs, lots of challenger banks. Global fintechs are obviously moving into the market. So the question really has been posed, is the sector at risk of becoming too overcrowded? And if anything, what could the New Zealand sector actually learn from this?
It's a really good question, actually, and it's certainly one that we ponder on internally as well. And to your point, we've seen significant activity from new challenger banks, international remittance services, and of course, Buy Now, Pay Later providers like Zip over the last 2 years. And that's come from global companies expanding into Australia and New Zealand. And of course, there's quite a few homegrown talent as well that we've seen and we've worked with. Now, you know, interestingly, we've seen the use cases and the customer target segments of these participants change over time. And I think this will go some way to answering your question, in that a lot of the first wave that we saw were more likely to be consumer focused. They were centered around transactional banking, and their value propositions were really focused on that part of the banking ecosystem. But then more recently, what we've seen is interest in more small business related financing and platforms. So there has been that shift over that period of time, perhaps in relation to the fact that we have seen so many entrants and it's starting to get perhaps a little bit crowded from that perspective. Now, the one thing that they've all got in common is that they've got great onboarding and a great user interface experience. So they've generated a real buzz in the marketplace, particularly in Australia, and there's been a huge amount of customer interest. But now they need to add those relevant services to keep those customers coming back and to keep them engaged. Because if you stick with a limited product set, people will lose interest quite quickly and they will revert back to their traditional banking partners. So I think that's the next kind of horizon for the neobanks and the challenger banks that we've seen in Australia has really been about fighting hard now to keep the customers engaged. Otherwise, they really run the risk of becoming another app on your phone that doesn't get used very often. So I guess the advice then to the New Zealand fintechs is that, you know, a slick UI alone is not enough. You need to go and back it up with a compelling feature set that solve a real need for those customers, and be really specific about what customers that you're looking at and you're focusing on and what the problems are. So back to basics really, and identifying the real problem. It's partly answered your question, James. You know, in terms of, is it overcrowded? Well, the market will decide, to be quite honest. I think people are more likely to have multiple bank relationships today than perhaps they were 3, 4, 5 years ago. I think there is a lot of testing. So I think a lot of people will download the latest banking app, they'll get on board and they'll get the fancy new card. But will they change their behaviors? Will they move across from perhaps one of their traditional big four? And like I say, that really comes back to the value proposition and the expansion of the services from that perspective. So time will tell. It does seem to be quite a lot. The strongest will survive, you know, survival of the fittest. Darwinian theory will probably come into play at some point. And again, we're seeing that in the buy now, pay later space as well. So I'm sure Todd will react to that. But there's now quite a few buy now, pay laters. Afterpay and Zip have established themselves really well. And of course, we've still got overseas challengers like Klarna coming into the market too. So it is quite crowded. Consumers decide, and it's great choice from their perspective. So consumers win.
Yeah, and I think for me, I mean, you know, the market is generally big enough, I think, for multiple players. Your point, I think, is spot on, where being very clear in the problem that you're trying to solve. And I think that, you know, I've definitely seen organizations sort of spin things up, and you ask that question, you know, what's the problem you're trying to solve? And it's really not that clear. And I think that's the danger when you've got a lot of noise in the market. Those that are, you know, very much like, you know, what Todd and Zip are doing, it really is actually answering the question, and therefore people gravitate towards it. And that's why I think we've seen such a surge in the usage, and also by the fact for, again, non-essential items, where others, I think, will just get, you know, lost in the noise. And, you know, it might be that might be unfortunate for some. But equally, I think, to your point, you know, the market will dictate. You know, the sort of the champions will prevail. But that sort of brings me to quite an interesting point, because certainly in New Zealand and parts of Asia, there was that sort of let's call it a happy friction, where, you know, when FinTech was first introduced, FinTechs were going to, you know, come in and sort of take over and rule the world and all this type of thing, and, you know, possibly some of our banking colleagues would possibly say, well, actually, you know, we will do it. We've got the money, we've got the infrastructure, we've got the customer base. Whereas really where we've evolved to, and exactly where we need to be, it's actually about how do we collaborate, how do we partner, and ultimately actually what drives either solving the problem or actually a better customer outcome, therefore a better customer experience. And ultimately that's what we generally want to do. So if I can move to you, Tasneem, just a question we've had coming in about the sort of the FinTech Fast Track program. Mm-hmm. and you know, some may not be aware, and obviously I'll let you share the number, but some people might not actually be aware of the number of FinTechs actually in the program. But the question I suppose I want to put to you is, you know, why would you say it's important for someone like Visa, you know, a global leader, in this particular space, to partner with newcomers, and what do you see that will help to enable in the future of financial services, both here in Asia and indeed around the world?
Yeah, sure. Happy to take that question. So like I mentioned before, like Visa is a network business, right? So we're based on partnerships. We believe in the power of partnerships to kind of shift and grow our business as well. And we also realize that fintechs are totally changing and disrupting the financial services industry. AJ touched upon this. There are specific pain points that they're addressing really, really well. And so there is a recognition on our end that the future of payment innovation really depends on the ability for us to collaborate with fintechs, but also bring together the various entities within our network, right? Banks, acquirers, merchants, all of them. And that's kind of our role as a network ecosystem player. And you're absolutely right. Even when we look at our traditional kind of financial institutions that we work with, we're seeing that almost 42% of banks are engaging in joint partnerships with fintech. So it's happening all across the board. To us, the working with fintechs is really that innovation bit, right? Finding new use cases that we can work on together, unaddressed needs that we can create products around or launch new products around, right? So that's really what Visa is looking to do with fintechs. And for fintechs, what we provide is basically scale, right? So the scale that Visa provides across the globe, really, with our merchant network and our consumer network, it's incomparable. So for a fintech looking to launch from one country to multiple countries or to even scale within a country, working with Visa makes that much easier. I also saw there was a question around fraud and if there's been an increase in fraud, right, in the last few months. And the answer is absolutely yes. Across the ecosystem, we're hearing so many more kind of reports about phishing scams and payment scams and so on and so forth. And one of the things that we offer fintechs in working with Visa is access to our payment network, where we've got really sophisticated fraud and risk management capabilities that they then don't need to kind of spend a lot of time working on. And obviously we set the standards along with the banks and merchants and other technology partners, so we can help fintechs do that as well. So it's a really nice kind of win-win over there. Fintechs are addressing these very specific needs, and they're really great, as AJ said before, at building that beautiful customer experience. And what we bring is kind of the scale and the security and the interoperability on the back end. So to me, it really, really is a win-win kind of situation.
Yeah, it's interesting, that question around fraud, isn't it? That, you know, obviously we've seen in the press here in New Zealand, the NZX and various other organizations, and we were part of a study last year around cyber and, you know, the levels of protection. And I think one of the interesting statistics that came out of that was 6% of New Zealand businesses had adequate protection in place. So clearly what we're seeing in the last week or so, there's definitely some more work to be done. So I think to your point, Hasneen, having the ability to obviously partner with organizations like yourself can help sort of facilitate the acceleration to protect obviously those types of businesses, which I think is just a great thing. Todd, if I can come to you just for a moment, COVID, or sorry, I'll do it a different way. As a founder, as an entrepreneur, someone that's obviously done this very successfully, before COVID, you know, dealing with regulation, you know, raising capital, you know, promoting, you know, having a digital presence, being able to tell the narrative, both locally and globally, these are all very challenging things. Through COVID, I know your business obviously is doing extremely well, but have you taken a slightly different approach to some of that? Have you seen, you know, other, you know, friends who are also trying to, you know, run and set up a business come across these challenges through COVID? Is capital decreasing? Does the runway have to be longer? I mean, what sort of things have you been noticing?
Yeah, it's interesting. I mean, I probably haven't noticed too many, you know, there's a lot of things going on with COVID and that space. I think for me, it sort of boils down to what Anthony was mentioning earlier about kind of simplifying things, about making sure you're focused on solving a real pain and solving it well. And I think in times of probably in the times where there's money flowing well and the economy is booming, you can get a bit caught up in technology or applications or great marketing campaigns, where I think for me that, you know, the core of a great startup or a fintech is, you know, find something painful and solve it really well. And I think, you know, I also see a lot of businesses probably trying to solve try and solve 10 problems and only averagely solve 10 and don't really solve anything, you know, well, you know, businesses that look like they're sort of a great technology or great solutions, sort of wandering around trying to find a problem. So I think if anything, FinTech is really focusing down on what the problem you're solving, and also not necessarily having to necessarily solve every problem. You know, you look at earlier in the year, you know, Visa acquired the business Played out of the US, who, you know, are kind of the plumbing, right? So this is a business that doesn't really have doesn't have a front-end brand, but actually has the plumbing that connects fintechs to banks, so Venmo, Robinhood, those sort of businesses. And that's, they're a massive business, acquired for a fairly significant amount of money. But again, that was the plumbing to support businesses. So I think, you look at Zip, yes, we have a consumer-facing service, but we also have to ID people. We have to get credit scores. We have to take payments. There's a number of microservices within that we need help. There's some that we could certainly get a better service. Things with anti-money laundering becoming bigger. There's a lot of opportunities, I think, to solve small parts of problems that other people can use. So I think for me, it's really pushing down to having to solve problems really well, but also you don't have to solve everything. You might solve a part of someone else's business problem to help. The fundraising thing, with funding, we were probably pretty lucky with our timing with FinTech and in general. There was a huge, appetite for FinTech businesses. I think the Afterpay wave, we, got on behind that and rose. There was no shortage of access to capital. Yes, have things tightened up a bit, possibly, but I think there's still an element of that. And I guess for me on fundraising, it's about, get really good at doing what you're saying you got to do. Make a commitment and hit it. I think that's how fundraising works. You raise a little bit, say you're going to do this, hit it, and keep building. And the other piece is, treat raising money like not just a necessary evil, it has to be massively focused on. So probably my first startup, we didn't really have the time, the experience. We sort of needed it because we didn't have any money, but it was seen as a side project to trying to do what we did. But I think, with PartPay, until we got acquired by Zip, we had people with great experience in the business, and the commitment to focus on that as their main, John, our founder, he might have focused on that as his main thing for 3 or 4 months, and you needed the team around us to keep running the business. So I think it's also something that you need that runway. I think if you don't have the money, it helps you, you compromise, you stop running towards, what you should be doing. So I think it needs to be taken seriously, but I also think even with COVID, it's an exciting space. There's some great success stories coming out. You've got your PushPay, coming out of New Zealand, which I think is an incredible example of a niche, but a monstrous size niche if you look at it globally. So I think there's a bit of a tailwind still there. So I think it's an exciting time, but it does need to be really focused and taken seriously, because it's, it's certainly a hard and long and arduous part of doing, starting a startup. And anyone who tells you otherwise, I'd need to get their tricks anyway.
Yeah, I don't think it's the easiest thing to do, I must admit, and it is interesting. You're still seeing companies, as you've mentioned, do particularly well, in fact, very well, through obviously the pandemic, and businesses actually being able to spin and get to market possibly more quickly than what they might have done, or at least in the way that they were thinking to approach the market. We've seen even government actually loosen some of their let's call it their policy strings to enable more innovative products to actually get out there as well. Definitely think there's still more work to be done here in New Zealand, and that's just a personal view. And we are certainly working very hard with some of the other regulators around the world, like MAS in Singapore and similar in Hong Kong. Deep conversations with the UK government around the free trade agreement that's much more focused on SaaS and FinTech technology as well, because we've got organizations like yours that are doing really amazing stuff. We just need to now take it to a global market. And with that, I'm just conscious of time. So probably the final question for everybody, actually. We did a survey recently, and about 71% of the people that answered it obviously are thinking, launch, proof concept here in New Zealand, but then go global. So it almost went from, before it was New Zealand, Australia, different markets, you either went left to the US or right to Asia, whereas a lot now the terminology and the way that people think is global day one. So, Tasneen, AJ, Todd, I'd be curious just to in the last 5 minutes, just to get your views on maybe some of the little things to consider if you're looking to take your business to a global market, especially obviously in the current climate where traveling is a little bit more restricted, and how one might do that in a digital context. AJ, I'll come to you first, and then to Tasneen, then to Todd.
Thank you, James. So I guess there's no perfect way to do that, to be quite honest, right? We've seen examples of fintechs that have grown really well in their own local market, and they've taken a long time before they've taken the plunge in expanding overseas. And when they have, they've probably stuck to countries that have got the similar language base to their own, so that there's at least one barrier to entry that's been reduced. And then there are others that want to go to multiple markets from the very beginning, and they've also proven to be successful as well. So I don't think there's a one-size-fit-all approach from that perspective, but it all comes down to what we were talking about before, which is identifying a problem. Identifying a problem that you can then solve, and then identifying where else in the world that problem exists. Because if it exists in Australia or if it exists in New Zealand, there's a good chance that there are other countries in the world or other markets where that same problem is being encountered. And so long as nobody has solved it in those markets, then there's an opportunity for your business. In terms of what we've now seen as the result of the pandemic with COVID-19, I think the point that Tasneem made in the presentation around the rising importance of platforms and trying to look at ways in which your fintech idea can integrate into platforms and hit a larger audience as quickly as possible. You know, some years ago, people would build a website and then they'd build an e-commerce addition to that website so that they could sell online. That's not the way that we're seeing businesses have adapted under COVID-19 pressure. They've had to adapt really quickly, and as a result, they've jumped on board with platforms, and they've subscribed to platforms like Uber Eats. Your local restaurant doesn't set up its own website anymore with online ordering and employing its own delivery drivers. They join platforms instead. So I think if we take that rationale and apply it to other different business sets, I think that's the way that businesses are going to be able to expand from their New Zealand market and look at overseas markets, but identifying the problem first and looking to solve that problem.
Yeah, it definitely feels it's a bit of a theme. Tasneem?
Yeah, so if I think about my experience working with fintechs who are either expanding into Asia, expanding from one country in Asia into multiple ones, I think there are two things that I'd ask to keep in mind, or forward plan for rather. So one is there's a great deal of regulatory complexity to navigate within these countries. And it ranges from being really warm and welcoming to fintechs to being not so much. And so I find that the winners are those that are able to navigate this and remain compliant. And my advice always is to kind of launch in the 1 to 2 easier markets first before going global really quickly, right? I mean, for instance, Europe is very different from Asia. In Europe, regulatory approval in a single country means that you can passport it across other EU countries, right? So fintechs there have been able to expand across borders really quickly. Whereas in Asia, the license and regulatory regimes vary very dramatically across markets. So you have to be really cognizant of that, I think, before you plan your expansion. So that's just one bit of advice. And the second bit that I've found is really key to scaling and differentiation, going back to that bit around great customer experience is no longer enough. And we're already seeing banks doing the same thing and so on and so forth. That need to differentiate also means that you have to crack differentiating partnerships in these markets, right? Find out who can help you grow your business really quickly and partner up quickly before your competition does, so you can extend your capability and your user base really quickly. So those are the two things that I'd just ask fintechs in New Zealand to consider before they enter Asia or think about going global.
And Todd, just to you.
Yeah, look, I definitely think, you know, the going global thing, I think, has changed. Where it used to be, am I going to pack up my bag and move the family somewhere and launch a new business? You know, obviously that's a lot harder today in some ways than it was 2 years ago, but I also think the world's evolved. You don't necessarily have to do that. I think Anthony's call on leveraging those ecosystems and platforms, I think for buy now, pay later, you know, one ingredient in that kind of growth explosion was sort of millennials, you know, shifting away from traditional forms of credit. But the other one, in my view, was absolutely the huge growth of e-commerce platforms like Shopify. So if you look at, you know, between Shopify and Magento and WooCommerce, you could just access millions of merchants around the world. And I mean, for buy now, pay later, they could, you know, a Shopify business could plug in Zip and turn it on and have it live in a day with no, you know, no developer input. And I think the ability to drive that scale is huge. I think looking at whether it's Shopify, whether it's Xero's, you know, app store ecosystem, I think there's ways to be able to deliver great products without physically being there. And my other point would be, you know, think differently about what going global means. I think for PartPay, you know, we were launched in June 2017. A year later, we had partnerships up in the US and South Africa. We only had a team of 12 at that time. We actually did a deal with a couple of Aussies up in the US. We gave them, cut our code base in return for an equity stake in that business. You know, that business turned into QuadPay. That stake in that business turned into a huge reason. Zip acquired us, and then Zip have now acquired QuadPay. You know, I think that was a deal that we didn't get in a plane, we didn't go raising VC over there or go to the media about how great we are launching in the US. It was just a deal done to give the US business speed. They did that deal to do stuff faster, and it's worked for them, and it's worked well for us. So I think, you know, back into these partnerships and pieces, there's different ways to look at getting global scale that aren't necessarily, I'm going to, you know, get an office and get some people there and start knocking on doors I've never been and selling.
Yeah, I think, I mean, now is the time definitely to try and think about your networks or connection, the collaborative piece, and it's definitely been a bit of a theme, I think, throughout this. And if you look at some of the statistics around, obviously, the program and the number of fintechs that you actually have as an organization involved in that, I mean, it's just absolutely phenomenal. And clearly, from a New Zealand perspective, we obviously need to see more. So, look, I'm just conscious we're just a little bit over time, but I'd like to try and finish on a bit of a high note, a bit of a positive note. So, just from the speakers, could be anything. Feel free to choose. What's one positive thing that you've seen come out of COVID that you want to continue? It could be a personal thing, it could be a business point of view. I'll leave that to your own imagination. I'll come to you first, Tasneem.
Yeah, I mean, that's an easy one for me. Spending more time with my family, being at the dinner table every evening, traveling a little bit less. I think it's been a positive change for my personal life, and I hope that continues. I kind of really like this work-life integration thing. I think that's going to be one of the most positive kind of lasting impacts of COVID, and I hope that continues on.
Cool. AJ?
Well, I actually think that productivity and efficiency have really been boosted for many people as a result of COVID-19. Classic example, right? So last month, I remortgaged my house. Now, normally that would mean going to see a financial advisor or a mortgage broker 2 or 3 times for face-to-face meetings, and then filling out forms and so on. We did the entire process via Zoom. The mortgage documents were sent to me via DocuSign. New South Wales government has now allowed everybody to sign mortgage deeds under DocuSign as a result of COVID. So the entire process was really efficient and really straightforward. So I think there's an increase, ongoing increase in productivity as a result of COVID. But then, of course, I mean, the tragic toll that it's taken, it doesn't really pay dividends as a result from that perspective. But I think the efficiency that we can see and the productivity increases that we've seen are going to last forever.
And Todd, final word?
Yeah, look, probably along a similar theme. I think the remote working, I mean, aside from me, I live in Pukekohe and work in Takapuna, so remote working certainly helped my time on the motorway. But I actually think that the remote piece is really changing the way people and business have to think, which I think will have a huge impact on building great businesses. And that's really a shift sort of from looking at inputs, like Steve was at his desk for 8 hours today, to outputs. So, you know, I've seen for our business and others, all of a sudden it's, you know, we use OKRs, but those objectives and key results are what really matters. How do we track those metrics? Hey, do we need to have daily stand-ups, some of that agile stuff that, you know, we're not a full agile shop, but I think when you're not just all in the office being busy, I think there's really positive outcomes to that on understanding, you know, what is important. And do we all understand what's important? Because you feel a bit alone if you don't when you're at home. So I think aside from, you know, there's the work-life balance piece, I think there's a real opportunity to shift the way people think, less thought about are people at work and, you know, are we having heaps of meetings? You know, a Zoom meeting with no agenda and no one knows what they're doing is just too awkward, whereas physical meetings happen like that all the time, you know? So I think there's, I think a lot of, you know, cultural and habits that are getting built off this that I think will ultimately build, you know, better products, better businesses, and have some real, really strong kind of positive influences on the kind of businesses we can build here, which is something I probably wouldn't have imagined going into it.
Yeah, I mean, look, from my point of view, you've all resonated and commented on something that's very dear to my heart. So not only was my FinTech hat on, but as the sort of the 4-day week ambassador for New Zealand, companies for years. I mean, the first time that remote or flexible working was actually mentioned many, many years ago, actually, funnily enough, in Germany. And a lot of organizations do have a remote or a flexible policy in their system. It's how it's utilized is my question. And certainly within financial services, to your point, Todd, the longer I spend in the office, the more time I'm at my desk. Clearly I'm being productive, therefore I should be promoted. Unfortunately, is still something that actually does tend to go on. What COVID has done is actually forced the conversations to take place and absolutely turn things completely on their head. Time allocated equals productivity, not necessarily the case. The output is the part where actually we need to focus on. People actually now feel much more comfortable in questioning the boss, the organization, the leadership. Why do I really need to be in the office for 10 and 12 hours a day when actually I have showed and proven productivity is either maintained or some cases actually increased? So I think we will see a shift. I don't advocate one way, a 60-hour week all of a sudden becomes a completely work from home. I think societal, cultural, we still need the interaction. And I certainly don't want to see our city centres become, abandoned, cowboy high streets with the sort of the tumbleweed coming down. So it's finding that balance. And with the 4-day week, I do a lot of discussions with big, large, small organisations of all different sectors, talking about how they can actually adapt some of this thinking into their own business and give empowerment and autonomy back to their employees, the staff, to figure out for themselves how they can actually do this. So it's been a really interesting conversation. So look, ladies and gentlemen, thank you for those that have bared with us. We're a few minutes over, but I think it was valid and worthwhile just continuing the conversation. To my panelists, to my speakers, thanks very much for taking the time out of your busy days. It's always great to hear from what's going on in other parts of the world that equally has an opportunity for New Zealand and New Zealanders, but equally actually what challenges might be coming down or the types of businesses that might be challenging, and just to be made aware of that. So to Tasneem, to Anthony, to Todd, thank you very much for taking the time out. Ladies and gentlemen, for staying on the call. It's been a pleasure, and keep an eye out on our website for the next in our series. Take care, and we'll speak to you soon. Many thanks, everybody.
Bye.
Bye. Bye.